So the big question is this: how do investors like us who trade options and manage our own money generate income regardless of where the stock market goes, and do it all in a way that lets us make time for the people and things we love, and yet still build wealth and remain profitable? That's the question, and this podcast will give you the answer. I'm your host, Kirk Duplessis, and you're listening to The Daily Call from Option Alpha. Hey everyone, this is Kirk here again at OptionAlpha.com, and welcome back to The Daily Call. Today we're answering the question, what is a broker-dealer, and more importantly, do we still need them? So to quickly answer this question, broker-dealers are a very important part of any financial system. In our financial system, which is extremely complex, very large, and in many cases very efficient, broker-dealers do serve a very important purpose. Now, to backtrack a little bit and say, what is a broker-dealer? Well, we have to break it down into two things. Well, first, there's a broker. And so a broker is just anybody who basically facilitates or helps you buy or sell securities. So, for example, right now, the best example maybe of this in its rawest format is maybe, say, Robinhood. So Robinhood is a brand new brokerage, and all they do is they help facilitate the actual transaction. So they are basically, if you want to call them a middleman, they're a security facilitator, where if you want to go buy stock, you would do it through Robinhood, and they basically connect you to the market, right? Now, a dealer, on the other hand, is actually a company who actually invests their own money and has their own interest in buying and selling underlying securities. So some of the biggest investment banks in the world, Deutsche Bank, Goldman Sachs, JP Morgan Chase, all of these ones, they have a brokerage arm where they will actually help clients and help people buy or sell securities. But then they also have trading floors or investing floors, dealer floors, which they are actually trading and actually physically maintaining positions for the bank itself, for the actual investment bank itself. And so they're what many people would call a broker-dealer. And many of the largest firms and investment banks and many of the largest brokerages that you hear about now have both. So they end up being both. So the question becomes, do we still need them? Obviously, I think we do. I think we can go down a huge rabbit hole of the conflict of interest that comes about because banks have a brokerage arm and a dealer arm, if you want to call it that, or are investing firms' money, but also offering up advice to clients. I think that, on the outside, though, it's generally okay as long as there's a division between these two. So what a firm does with its own money and what it needs to do to hedge its own risk, or where it thinks are the better investments for firm money, that's firm money. That, they can do what they want with their money, in my opinion. If somebody comes in and they walk in the door and they say, hey, look, I'm going to buy Apple stock, I want to buy Apple stock no matter what you say, no matter what you do, then they can facilitate that transaction and serve the client just as well by doing that as they are doing if they say, we're not going to buy Apple stock with our own firm money. But if this guy wants to walk in off the street and he wants to buy Apple stock, and we've told him that, we don't think it's a good decision, or maybe advise him something else is better, he still wants to buy it, then they have to buy. They can, make that decision and let the guy buy the stock, help him buy shares of Apple. So I think when there's that division and you understand that a firm can invest its own money for its own purposes and hedging purposes and strategic business purposes, and it doesn't always necessarily have to agree with the actual client that's walking in. And obviously we know that everyone here, even listening on this podcast, is in totally different places in their life, financially, location-wise, age-wise. We're all totally at different levels. And so what might be good for you may not be good for me, and vice versa. So I think they still serve a valuable purpose in the market, even more so, and we could get into this on another podcast, but just on acting as a means for people and companies to get liquidity and access to capital through public markets. Investment banks and broker-dealers take on a lot of risk in sponsoring a lot of these companies and putting together some of these deals. And so without that, companies don't have the ability to grow and increase their capital and debt and, leverage themselves to be able to expand and build new companies and new plants and territories. So I think they serve a really important purpose in the market. Of course, we always have to watch and monitor them. That's obviously the job of the regulators and the government. But for us as traders, I think it's important to understand at least this quick little distinction. So hopefully this helps out. If you guys have any questions, as always, let me know. Until next time, happy trading. Thanks for joining us on The Daily Call. Be sure to subscribe right now for more daily options trading ideas, strategies, and tactics to help you learn how to place smarter, more profitable trades. And if you like what we're doing, don't forget to give us a rating and a review so we can continue to bring you the best daily content possible. We'll see you again tomorrow, right here on The Daily Call from OptionAlpha.com.